Welcome to Exponential Finance, where we connect AI, cryptocurrencies, and markets to help you understand what matters and how to act each week. Today we present a very interesting analysis by Jordi Visser.
So let's jump right in. After a whole lot of fear and what some people have been calling a retail bloodbath, the big question on everyone's mind is this it? Is the bull market finally over?
Well, according to this analysis by Jordi Visser, the answer is no. This isn't the start of some big collapse. It's actually a healthy, maybe even necessary correction. Let's dig into why the market's foundation is a lot stronger than you might think.
Okay, so you look at all the panic in the headlines, but the actual numbers tell a totally different story. The S&P 500? It was only down 1.6%. That's just a typical pullback. And here's the really important part. A lot of sectors were actually up. That's not panic selling, folks. That's rotation. It means money is just moving around, not fleeing the market.
And that brings us to a classic sign that a correction has pretty much done its job. This key indicator, the percentage of stocks above their 50-day moving average, is now below 40%. You know what that usually means? It means the weak hands have been flushed out, and that often sets the stage for the next big leg up.
This is just a really crucial point. There's a saying, when banks and financials are strong, markets almost cannot go down. And wouldn't you know it, major bank stocks have been hitting all-time highs. That's a huge signal that the credit system is healthy. There are no systemic risks hiding in the shadows right now.
You hear this all the time, right? That this whole rally is just a handful of giant AI stocks. Well, this right here, this busts that myth wide open. The equal weight S&P 500, which doesn't let those tech giants skew the results, it also just hit an all-time high. That tells you there's real broad participation and strength across the entire economy.
Okay, so if it's not a bubble about to pop, what's the real story here? What's driving this thing? It really all comes down to AI and its massive impact on profits.
Visser has a great term for this. He calls it QE for the mind. It's a perfect analogy, right? The Fed's QE was like pumping liquidity, money, into the market, while AI is pumping intelligence into companies. It's creating these insane profit margins and operating leverage. He actually argues it's an even more powerful tailwind for earnings than QE ever was.
So I know what you're thinking. This time is different. Famous last words, right? But in this case, it really is. The dot-com bubble? That was all speculation and dark fiber. Companies spent billions on fiber optic cable that literally nobody was using. But today, there are no dark GPUs. Every single bit of computing power is getting used immediately and generating a return on investment. This isn't speculation. Companies are making these massive bets on AI because it's an existential necessity and it's already hitting their bottom line.
But, and this is a big but, all of this AI-driven efficiency has a flip side, a pretty major social consequence actually. It's creating what people call a K-shaped economy, where wealth rockets up for those at the top, while things get tougher and tougher for everyone else. And that's creating some really profound pressure in society.
You know, Peter Thiel warned about this way back in 2020. He said if one has no stake in the capitalist system, then they may well turn against it. And his point is becoming a reality, isn't it? We have a whole generation struggling with debt, they can't afford housing, and now they're staring down the barrel of an AI-disrupted job market. Thiel's warning feels more real today than ever before.
And look, this right here is the key number to watch. It's not about the official unemployment rate. It's about underemployment. 41%. That's how many recent college grads are in jobs that don't even require their degree. Think about the frustration there. That's the kind of thing that fuels a real desire for some kind of systemic change.
So Visser lays out this whole chain reaction. It's pretty clear. Step 1, AI drives productivity, but also inequality. Step 2, that leads to underemployment and social unrest. Step 3, voters start turning against the system. And what's step 4? That creates huge pressure on governments for massive spending, for handouts, you name it.
And all of that whole political backdrop, that's what sets the stage for Visser's central idea, his Bitcoin IPO thesis. He argues that to really get what's happening in crypto right now, you have to look back at what happened to the Nasdaq right after the dot-com bust.
I mean, just think back to the Nasdaq's long recovery. The bubble peaked in 2000, the market bottomed in 2002, and then it took 16 years. 16 years of just grinding sideways through the financial crisis and everything else before it finally broke those 2000 highs. It was a brutal time for investors.
And when you compare that to crypto now, the parallels are kind of striking. You've got that same feeling of hopelessness, that post-apocalyptic vibe. You've got constant selling pressure from VCs and early insiders cashing out into every rally. And on top of all that, AI is soaking up all the venture capital that might have gone into crypto. The result? It looks like we're in for a similar prolonged consolidation.
But here's the kicker. Visser points out that despite all of this constant pressure, Bitcoin has somehow managed to work itself higher, just like the Nasdaq did back then. It's been absorbing massive amounts of selling from early investors and VCs, and it's still grinding up. That's a sign of some serious underlying strength.
And this is it. This is where the two biggest stories of our time, AI and crypto, finally crash into each other. Because the social pressure created by the AI revolution, that's what's creating the real, structural demand for what crypto does next.
The whole argument is that these aren't separate things at all. They're two sides of the same coin. As Visser puts it, the internet gets its financial layer. AI is intelligence, crypto is money. They're poised to completely rewire the global economy, together.
I mean, it just makes sense, right? As our world gets more and more digital, more automated, it needs a native digital currency and financial system to run on. And that's what this is. AI and crypto, together, are basically forming the new operating system for the global economy.
And that leaves us with one last really provocative question. What if the purest use case for Bitcoin isn't even for us? What if the next billion Bitcoin users aren't people, but autonomous AI agents that will be managing a huge chunk of our economy? To learn more and stay up to date with the latest in the world of Bitcoin, visit exponentialtom.com and subscribe to the channel.